Mike Tedeschi, Wealth Management Advisor and Perspective Wealth Planning. With this week's market breakdown, we are going to take a look at the four major U.S. indexes as always and analyze those. But the most important thing that we're going to talk about in today's video is what's going on with the U.S. dollar and commodities subsequently. So let's jump right into it here. The S&P 500, I'm actually recording this Thursday, the 17th, before the market open. It's actually above that 37.17 on the futures side. So we are actually open here up at all-time highs on the S&P 500. We've had a series now over the last month and a half of higher lows put in. We're holding above that breakout from August. The market looks extremely strong. The Nasdaq has gone back to being its leadership and has broken out and made new highs. If we really analyze the way this chart setup looks, this was the resistance zone. We fell right back into it, held, and subsequently have turned back up. So we have higher lows that are put in here on the Nasdaq over the last couple of months. We're breaking out once again to new all-time highs. Extremely strong, extremely bullish looking chart. Now the Dow has been a bit of a lagger here. It's now the worst performer year to date out of the major indexes. It is holding above that breakout zone from back in February, but having trouble really kind of making that real big push here to the upside. It's definitely the weaker, but it is at all-time highs, which is not a bearish thing whatsoever. So again, it's just an area where we have not seen capital flow into the same way we've seen them in other areas of the market. Now, the Russell had been the big lagger for quite some time, and now it's gone back to being a leader here over the last month. We've seen some days where money has come out of the Nasdaq, and that money has flown directly into the Russell. We have not seen a meaningful pullback since we made that breakout back in November, and we have seen a straight up move from there. And if you're wondering on a percentage basis, we're up 15% from that breakout all-time highs in a month or so. That is a huge move, and we continue to see grind higher there out of the Russell. So that is a very bullish signal when we see those mid and small caps making those kind of moves. Now, part of the reason why we're seeing such incredible moves is the weakness out of the U.S. dollar, right? Things that are priced in U.S. dollars when the dollar is weak subsequently have a tailwind behind them, and we are starting to see that. So let's really take a look at the U.S. dollar on a monthly basis here in a second. But if we look at here on a daily chart, we've talked about this. This breakdown here at 92 was important. We pulled down. We actually created a bear flag, and now we've continued to head lower. So where is the important level that we need to pay attention to on a long-term chart? And that is going to be that 88 zone. Let's look at the 88 zone. The 88 zone was really, really important in 2008, 2009 as a resistance point. It was also, again, in 2011 as a resistance point. We finally got our breakout from it back in 2015, and then it acted as support once again in 2017 and 2018. So you can see over the last 10 years, this has been an important inflection spot 4 separate times. And if we go back all the way to 2003, 2004, this whole zone right here was important. So there is a lot of historical importance to this 88 level, and we are watching it very closely. If we come down to this 88 and hold and start to turn back up, that completely changes the way things look. At the moment, extremely weak. If we were to slide through that 88 zone, the U.S. dollar doesn't have support until 82 to the 78 zone, and then below that it doesn't have support until we get back into that 72 zone. So the way I'm looking at this right now, this is our support area. If we fall below it, we then fall into this zone, and if we fall below that, we fall into this zone. If we hold here, again, we're looking at that 92 to 94 zone as that resistance point. That's how we're looking at the U.S. dollar. What we're starting to see across the board is we're starting to see some commodities really, really ramp and take off as the dollar weakness continues. Let's take a look at our precious metals market. Gold. If we look at this on a monthly chart, that's quite a reversal that's now being put in place. And this has really happened here over the last couple of days. We're back towards that 1900 zone. Get back up over 1900, 1950 is the next test. I've talked about this 1950 as that really, really important level. Above that, I think the uptrend resumes. So we're watching that very, very closely. Sister metal silver is now back up over 26. This is boding well. So silver is now above that spike from in November and is starting to lead again. So we're seeing the smaller thing to lead, sort of the same way we've seen kind of the Russell lead on the indexes. That's usually a very good sign. If we take a look at some of the other metals here, let's take a look at platinum. Platinum is holding up above that 1040 zone, and we've talked about, right? It's fought right around there, but it is up above that. So we're going to watch to see if that can continue its follow through to the upside. Palladium has just been an absolute monster for a long time. This year hasn't done much. After the initial opening push, is traded in a very tight range. 2,500 still the important level there. Nothing has changed there. Copper is continuing to rock and roll higher. So we're about to put in another new high and take out the one from a few days back. Let's look at this on a monthly chart. Again, kind of open skies above until we get to that 3.8 zone. Now, the next area I want to take a look at is oil. Oil continues to make its rock and roll move higher here as well. So here's the daily chart on oil: high, new high, new high, new high, new high. From the sell-off back in here. Obviously, not a new all-time high or anywhere near that. 50 is the main level. We've talked about that a bunch on oil. So we're really watching what goes on here at this 50 zone. We are going to test it from the other underside, but oil has made that nice grind higher. Now, I know what a lot of people have been talking about here recently, and that would be the crypto market. Bitcoin making a new all-time high. So let's look at the weekly chart on Bitcoin. Right, we had the 20,000 zone was where we failed from back in 2018 and fell down all the way back to that 3,000 zone. We had a big push up in 2019, fell mostly all the way back, but put in a higher low, if you're looking at it like that, in 2020. Subsequently have made a really nice kind of cup potential handle, massive push, break above all-time high, and as soon as we got over that 20,000 mark, we flew all the way to 24,000 in almost 24,000 in one day. So you can see just a huge thrust here to the upside on that major breakout zone. That right there is another play against the U.S. dollar, right? It's priced in the U.S. dollar. If the U.S. dollar is going to be continued to be weak, this could essentially be digital gold. Some people are looking at it like that. It's becoming a little bit more mainstream, and we're starting to see some movement out of it. So it's another very interesting space to pay attention to against what's going on in the U.S. dollar. Last thing I want to take a look at is the emerging markets, right? The emerging markets continue their grind higher, and we've talked about the correlation between the U.S. dollar and the emerging markets as well a number of times. We're really looking at that 12,073 level. We're about 10 points off of it, so we could be in a spot here where over the next week or two, we do make new all-time highs out of the emerging market index here. Or 5-10-year highs out of the emerging market, and that's really what we're going to be paying very close attention to, because we have seen some countries make incredible moves here over the last month or so. And again, is it because those economies are super strong, or is it because what we are measuring them in is continuing to lose value, i.e. the U.S. dollar? So I think the dollar is going to continue to play a very, very important role in many different avenues of the market here as we continue to go into 2021. We printed so much money in 2020 that the dollar devaluing does make logical sense, and we are starting to finally see asset prices priced in dollars really start to head higher. So inflation may really be here, guys, when we start taking a look at those metals, those physical assets, those commodities as well. As always, guys, I hope you have yourself a fantastic week. If you ever want to reach out and talk to me anything with the markets, you can reach me at mtedeschi at perspectivewealthplanning.com. You can also shoot me a phone call at 814-580-9881. As always, I will see you guys next week. Take care.